Okay, let's unpack this. Um, have you ever wondered how these companies, the ones providing essential services to, the world's biggest financial institutions, how they keep innovating
Hmm.
and growing, even when the global economy throws curveballs? Today, we're taking a deep dive into SS&C Technologies. They're a real powerhouse in financial and healthcare software and services. We're pulling directly from their latest Q2 2025 earnings call and press release, literally just out to get the most important nuggets of knowledge for you.
Yeah, and what's fascinating here, I think, is how SS&C is not just reporting strong financials, and we are talking record-adjusted revenue and adjusted consolidated EBITDA, first time passing $600 million in a quarter.
$600 million, wow.
Exactly. But it's also how they're laying out this clear strategy for future growth. It's a mix, right? Impressive organic expansion, but also smart acquisitions and these big bets on new tech like AI. Which raises a really interesting question. How does a company with such a diverse portfolio, I mean, how do they consistently deliver? They even raise their guidance for the full year, navigating all these macroeconomic challenges in different parts of the world.
That's it. That's exactly what we're going to explore. We'll look into their impressive Q2 numbers, definitely, and check out some surprising areas where they're seeing double-digit growth, and then really dig into their strategic moves. Their groundbreaking work with AI, which, get this, has already led to their first external sale, promising dramatic efficiency gains, plus that definitive agreement to acquire Calastone, this global funds network. So get ready for some aha moments, I think. You'll leave well informed about the pulse of a critical part of the fintech world, not just what happened, but really why it matters. So let's start with those numbers then. S&C really had a stellar Q2. We're looking at adjusted revenue hitting a record $1,537.8 million.
Yeah, over $1.5 billion.
Exactly. In revenue, that's up 5.9% year over year. And adjusted diluted earnings per share came in at $1.45. That's nearly a 10% increase.
Pretty solid.
Right. But the real standout for me, maybe, was their adjusted consolidated EBITDA. That key measure of operating profitability before all the deductions. For the first time ever, it crossed the $600 million mark in a single quarter, hit $600.4 million, up 7.4%. That's a robust 39% margin.
And a critical observation here, I think, while those headline numbers are definitely impressive, is the underlying organic growth. That came in at 3.5%, and financial services recurring revenue growth was 3.9%. That reveals a really solid, predictable base.
Predictable is good in this climate.
It absolutely is. From a broader industry view, this predictable revenue stream isn't just like a comfort blanket. It's a strategic weapon. It lets SS&C invest more aggressively, perhaps, in high-risk, high-reward areas, things like AI and acquisitions. It differentiates them from competitors who might be more focused on just, weathering the economic storms.
Makes sense.
And their cash flow from operating activities for the first half of 2025, also up significantly, over 14% to $645.1 million. Shows really strong operational efficiency.
And they're managing their finances tightly, too. Some substantial share repurchases. In Q2, they bought back 3.4 million shares for $269 million. But the big question, is where is this growth actually coming from? The earnings call really highlighted GLOBAB, GIDs, and WYT as key drivers. GLOBAB, that's their fund administration business, right? It had incredible organic growth of 7.3%.
7.3%, yeah.
With double-digit growth in private markets. Venture capital, private equity, those less liquid investments over 10%.
Yeah.
And retail alternatives, like funds for everyday individual investors, soaring at 20%.
Yeah.
That's a lot of action in complex credit, hybrid funds, family offices too.
Absolutely. And, while retail alternatives are maybe still a smaller piece overall, that 20% growth rate suggests a pretty substantial future runway. GIDS, that's Global Investor and Distribution Solutions, their team helping asset managers connect with investors. They continue to win key clients, delivering these high-level professional services, often building out custom tech or functions. And these usually turn into recurring revenue contracts after, say, a 3 to 6 month initial engagement. That model is a strong indicator of future stickiness,
Sticky revenue, always good.
Definitely. And even with Intralinks, which helps with M&A deals facing those macroeconomic headwinds like declines in global deal volume in Q2, early indicators show activity picking up for the second half. Plus, it's bolstered by their new AI-powered Deal Center platform. It really makes you wonder, though, how do these diverse business segments truly complement each other to create such resilience in these varying market conditions?
Yeah, you highlighted how that diverse portfolio adds resilience, and that's a perfect segue actually into another key piece of their strategy, the Wealth and Investment Technology Division, or WIT. That also contributes significantly to this integrated approach. Genesis, for example, is gaining serious traction. They recently replaced a competitor at a $75 billion plus bank trust in the Midwest. And Singularity is winning big insurance companies. They're constantly enhancing features for things like bank loans, commercial mortgage loans, even their class action services business, Bataya, won 30 new clients in Q2. And get this, two-thirds of those were cross-sells from existing SS&C clients.
Wow.
That's brilliantly leveraging their massive client base, right?
Yes, absolutely. And look, while the health solutions segment saw flat organic growth this quarter, it's important to remember the dynamics of that business. It's kind of unique. The main selling season for health plans, especially Medicaid and Medicare, is basically now through the end of the year. Deals usually close around October 1st for a January 1st start.
Ah, okay, so it's seasonal.
Very much so. And deals in healthcare can range from, say, $5 million to over $100 million. I mean, to put that in perspective, that's like signing a major city's entire healthcare system. So it's naturally lumpy as they close these huge contracts. The long-term opportunity there, especially with their internal efficiency gains through AI we can talk about, is still significant.
Okay, now let's pivot to their strategic vision, because this is where their forward thinking truly shines. Their AI strategy. SS&C isn't just talking about AI. They are actively deploying it. They've integrated their Blue Prism intelligent automation platform with their business units. They're identifying workflows, building new AI agents, and deploying them internally. And this isn't just, theoretical stuff. They've already saved or avoided a couple $100 million internally through these efforts. Just let that sink in.
It's a truly impressive achievement, yeah. And what's particularly insightful here, I think, is that this internal success is now translating to external sales. They've made their first external AI agent sale. It was to an insurance conglomerate in the Midwest.
Okay, the first one.
The first one. And this AI agent helps process hundreds of credit agreements every month. It reduces manual effort by up to 80%, speeds up processing by 3 times, and improves accuracy to over 99%.
80% reduction.
80%. This isn't just about efficiency anymore. It's about shifting the very definition of work in financial services, isn't it? Imagine if this 80% reduction becomes like the industry standard. SS&C isn't just selling a product here. They're selling the future of back office operations, positioning themselves as a critical enabler of this whole transformation.
That's a profound observation, and it leads to a crucial question, I think. Given the complexity, right, of implementing AI across such a massive client base,
Yeah.
what are the primary challenges or bottlenecks SS&C might face in scaling this? Is it a talent issue, maybe? Client readiness? Something else?
That's an excellent point. Scaling isn't just about the tech itself, right? It's about integration. Integration into deeply embedded client workflows and ensuring clients have the right talent internally to actually leverage these tools. SS&C's advantage here is probably their deep relationships, their understanding of their 22,000 clients' operations. That should ease adoption, I'd imagine. But the pace. Well, the pace will undoubtedly depend on individual client readiness and, internal change management. That's always a factor.
Well said. And speaking of strategic moves, just on Monday, they announced a definitive agreement to acquire Calastone, that global funds network we mentioned. It's for approximately $1.03 billion. This acquisition, they expect it to close in Q4, and they project it to be accretive. So, adding to their revenue growth, EBITDA margin, and EPS within 12 months.
Right. And zooming out for a moment, Calastone brings access to attractive new geographies, plus additional capabilities in areas like ETFs, digital assets, and money market products.
Okay, broadening the scope.
Exactly. It also opens up significant cross-sell opportunities. Calastone currently serves about 4,500 clients. SS&C sees maybe 10,000 of their own clients who could benefit from Calastone's offerings.
Huge potential there.
Huge. And acquiring a business that's already growing at 10% to 15%, that's a strong move for SS&C's own organic growth trajectory. Calastone's funds network provides BPO business process outsourcing functions for things like post-trade processing, trade reconciliation, across 57 countries. And it's highly automated, straight-through processing. It really looks like a strategic fit for their capital allocation strategy, finding these high-quality businesses.
And it seems they're not afraid to put their money where their mouth is when it comes to growth and acquisitions. Their capital expenditures are running higher than historical levels, right? At 4.1% to 4.5% of revenues. That reflects continuous investment in R&D and new products across their different geographies and product suites.
Yeah, they're investing heavily.
Their CTO even said they're not going to starve their development teams because technology is our seed corn. I like that phrase.
It's a good one. Shows commitment.
And If you were wondering about their appetite for even larger deals, their CEO mentioned they'd be comfortable with leverage in the mid-fours,
Mid-fours, okay.
meaning they're open to taking on a significant amount of debt, roughly 4.5 times their earnings, which could potentially enable, maybe, a $5 billion acquisition.
Wow, that's ambitious.
It indicates a strong belief in their sticky business model, doesn't it? And their position in what they call the sweet spots of financial services. So what does this all mean for you listening? We've seen SS&C Technologies deliver record results, driven by strong performance across various units, like GeoBab's growth in private markets and retail alts, and strategic acquisitions like Calastone, which will open up new geographies, new capabilities, areas like ETFs and digital assets. It's clear they have a keen focus on continuous innovation, particularly with that AI strategy and ongoing R&D investment.
Yeah, and from a broader industry perspective, I think their diversified revenue streams and that client-focused approach, highlighted by their stable 97% retention rate that seems to be key to consistently overcoming macroeconomic challenges. The internal deployment of their Blue Prism AI, leading to hundreds of millions in cost avoidance, dramatically improved processing, and then the success of their first external AI agent sale to that insurance conglomerate, it really underscores a significant paradigm shift, I feel.
Yeah.
This specific AI agent reduces manual effort by up to 80%, speeds up processing 3x, improves accuracy to over 99%. This isn't just optimizing existing processes anymore, it's fundamentally rethinking how work actually gets done.
It's truly about finding those sweet spots in financial services, isn't it? Consistently investing in cutting-edge technology and leveraging that massive 22,000-strong client base. And this is the truly transformative aspect, I think. If a company like SS&C can achieve such dramatic efficiency gains through AI internally, and then strategically deploy and sell that capability externally to its vast client network, what does that imply for the future of your operational roles, your service delivery across the entire financial and healthcare industries? What new challenges, what new opportunities will emerge as these digital workers reshape global operations and increase efficiency on such a massive scale? Something to mull over as you consider how knowledge isn't just gained, but actively applied and, well, transformed.